All right, ladies and gentlemen, good afternoon, good evening, traders. Today is May 24th, 2023. This is going to be a short session, and I want to talk to you guys about some of my tips and tricks, if you will, that will help you guys in being consistent with your trades. But not only consistent, but what I want to talk about is being at a Zen state with your trades. We all can agree that trading is very difficult and conditions always vary. We're either trending or a lot of times we're just kind of chopping around within a pretty tight range. So things get pretty serious, right? Things get a little bit more difficult and they're not always easy. So we have to have something that we can rely on. So some of these tips that I'm going to show you really boils down to how I execute a trade. Now, I'll tell you every time that I come into a trade, I always know what I'm willing to risk and how much I'm willing to lose. And that really is what I believe gives me the edge over many, many traders, besides using supply and demand. Because really, at the end of the day, I can show you how to find supply and demand. I can give you some of the best levels you've ever seen, but that doesn't mean that you're going to have the confidence to take the trade. Okay. I think we all agree, right? In order to get confidence, I think you need to understand what can happen when you take that trade. All right. So, the way that I approach almost every trade is I look at it like a zone. Okay. So, I'm going to open this up and I want you to understand supply zones, demand zones, they look like boxes, right? You have a supply zone up here, you have a demand zone down here. And basically, what you're looking for is when price pushes into a supply zone, you're looking to go short or bring up those stops on a long position, right? When prices come down to a demand zone, we're looking for price to go bid, but sometimes buyers don't show up. And sometimes the shorts don't show up. So, how can we make this a little bit easier? Okay. Hi, Lorna. Hi, Mirza. And you guys, just to verify, you guys can hear me, correct? Okay. Good deal. Good deal. So, you might just need to reboot yourself if you can't hear me. All right. So, when we're looking at this, most supply and demand traders, I want you to understand, even if you don't trade supply and demand, I believe these tips and tricks are going to really help you out. And if you're interested in supply and demand, obviously come in here into the trendy trading room within Simpler Trading and come check us out. Okay, that's all I'll say about that. Now, a box, a zone really gives me what I need in order to take a trade because the first thing I look at is I understand where we could go short and where my stop would be. Everybody understand that? And in a demand zone, I know where my entry could be and where my stop can be. And the cool thing about this is that the distance between this line and this line is my risk. The distance between here and here is my risk. Okay. So the tip that I want to show you is this. We can all find a zone, okay, and we can label them and we could say, hey, we want to trade these. But some traders, they look at this and they say to themselves, there's just too much risk in here. I'm not willing to take a stop at the backside of that box, right? I'm not willing to go long here because I'm not willing to take a stop at the end of that box. Sometimes the boxes are not created equal. That all comes down to candle structure. Okay. Now, one of the first tips that I want to show you is when identifying supply and demand, and then I'll show you how you can apply it to other things in your trading. But one of the first tips that I want to show you is what you do is you take a zone, you use the Fibonacci tool, and we are going to measure. Okay. If it's a supply zone, we're going to measure from the top to the bottom just like this. We are going to click on the Fibonacci. We're going to right click and we're going to edit properties. And then we're going to change the coefficients. What we are going to do is break down the zone into quarters. And it's pretty neat when you do this. First thing I'm going to show you is the 0.23. I'm going to turn that into a 0.25. Here, I'm going to leave the 50. And right here, I'm going to turn this into 0.75. Everybody understand? So then we click and boom, you have yourself 3 lines within a zone. Okay. Now, what are we looking for? Well, again, let me remind you, if price pushes up into a supply zone, a lot of traditional supply and demand traders, they're like, yeah, but it's pushing into the zone. I don't know what to do. Like, are we going to continue to push to the upside? Well, the first tip is you can do this and you can create little mini boxes, if you will. All right. So let's get this guy out of the way. All right. And I want to show you what I mean. I can have a box here. I can have a box in here between the 25 and the 50. I can have a box between the 50 and 70. See, what I'm doing is I'm allowing and giving you some sort of trade plan within the zone. Meaning, what I could say is if you went short here between 42.15 and the 25%, your stop would only be the difference between these two. If you were to go short at the 50, your stop would be between the 50 and the 75%. Does everybody understand that? So the execution would actually, as price is moving up here, you could be looking over to the right and going, hey, I think I want to go short at the 50. But let's just say that you went short at the 25 and then you end up getting stopped out for 3 points. And then you're like, okay, well, I'm going to try it at the 50 this time and I'm going to place my stop above the 75. Well, guys, just like good trading, you want to stick to a strategic process, something that's methodical, something that's repeatable. Okay. And you can repeat this over and over. And the cool thing about this is that it takes your risk down substantially. Okay. And then you take your second trade, and you guys can see the 3 points works in this trade, and then you end up getting something like this. Now, lo and behold, doesn't everybody wish they could short from supply into demand? Right? I think everybody wishes that they could do something like that. But the truth of the matter is, most people are just looking for so many points, percentages, and so forth, and then they're happy and then they kind of move on. So, again, the first trick is throwing these Fibonacci's inside of your zones. Okay. Now, there is another trick we use. We use the TTM Squeeze Pro. And again, I use the histogram within the zone to kind of help me line up. Basically, what I'm looking for is I understand that short sellers come in here. Okay. I understand that already. I've already explained that to you. All right. And what I'm looking for is I'm looking for the selling pressure or the buying pressure to ease up here. Well, buying pressure is really easy for me to understand because I love this color blue. And this is what I call trendy blue. So when it's trendy blue, the buying pressure is there. I do not want to get in the way, regardless if there's a supply zone here. I don't want to get in way of the buying pressure. I want to start to see the darker blue levels. And on the opposite end of that, folks, I don't want to necessarily go long if I'm looking down here and I see red bars. Those are really going to help me out. The red bars are letting me know that there's a lot of selling pressure on this particular time frame that I might be using. Okay. So yeah, sure. We dip down into a demand zone. It pops a little bit. We get down to the 25%. And I'll show you really quick what this looks like. If we go over here to a 5-minute chart, you can see as price comes into these levels, notice that we came into the 25, we flush it, but then we push right back up. Notice we break down below the 25, we hit the 50, we flush the 50 completely. Okay, so that's a dead trade for you. But if you're looking down at the histogram, you'll notice that these are red. There's nothing in here telling you to try and go long, regardless if there's a demand zone. That's a really good tip. The second thing is, let me show you another tip. First of all, this is what I'm going to tell you. So we get questions, John, where's your Discord room? Folks, if you didn't know, there's no more trendy trading per se. I am fully involved here at Simpler Trading. I am part of the team. The only reason you might see these Discord alerts is because when I do a weekly review, I'm just looking at them. They're easy for me to scroll through and show you guys. One thing you're going to notice about the Trendy Trading Room is we have a lot of winners. Matter of fact, we have more winners than we have losers. As a disclaimer, though, just so you understand, that does not mean that you will be a profitable trader. There's a lot to do with allocation and the right mindset. Wouldn't you guys all agree? How many of you have had a great winning percentage or strategy, but somehow it only takes one trade to mess up your entire day, month, year, week, right? Anything can happen. Okay. But what I will tell you is that we have a high percentage of winners. And I like to go through here and I like to scroll through so you guys can see it. We trade equity, we trade futures, we trade options, and you see a lot of wins and you will sometimes see losses. So the biggest question that I like to answer is like, well, John, what do you do when you lose? Well, that first tip that I told you, before I even take a trade, folks, I already know how much I'm willing to lose. Matter of fact, anytime I take a trade, I assume full loss. That is hard for some people to digest because a lot of people, they trade the wrong way. They come into the trading arena and they basically only see dollar signs and how much they can make. But in order to be a good trader, you have to come to an agreement with yourself that you will lose in this game. I'm scrolling over here on the right hand side since the 15th of this month, and you will see a lot of winners. Okay. Some are small, some are big. It doesn't really matter. The question is, what are you doing when it's time to lose? Now, I probably have the easiest answer. I assume full risk of my position. Okay. So everybody is different. So, one tip that I would give you before you're going to take a trade, be comfortable with what you're allocating. If you're not intraday trading and you go home at night with that trade, then you are assuming full risk and responsibility of that trade. If you are intraday trading and you are sitting in front of the screens, then you should be taking that trade and putting more emphasis on what you can do to manage that trade. Big Bull, do you always share your exit plan on all trades? My exit plan on all trades. So every time I take a trade, it could be the market can vary. All right? So that's a great question. So when I give somebody a chart, it is in supply or demand, or I have like these things called targets on it, okay? And if we don't get to the target and you see me get out, then there's a reason for that. It's because either I feel the market conditions are changing or something has just happened or I'm satisfied. It could be that, hey, I didn't realize I was going to make 100% today and it happened in one day versus 3 weeks. What I will tell you is that we are very unique here at Simpler Trading. My trades come straight from my API. So as soon as I execute a trade, it is sent to the room within milliseconds. Within milliseconds. Does everybody understand that? So as soon as I execute a trade from Thinkorswim, it's being transferred over to the members so that they could see that. And it does a lot. It creates transparency. It gives you time, right? Instead of me writing something down and it getting to you 30 seconds, 2 minutes later, it lets you know that I'm actually taking the trade, but it's also allowing you to see something in real time, right? There's not that big variation between where I get in and what other traders see. How about on my iron flies on zero DTE? So like with butterflies, my basic that's a good question. So on butterflies, I do it a little bit different. Okay. So with butterflies, I'm not trying to pin things. I'm trying to basically take back percentage. So my rules are a little bit different. So matter of fact, if we scroll down here, big bull, if we come down into the trades from today, let me show you these. Jump to present. It's just easier for me to execute and show you. If we come down here and we take a look at SPX, I got some trims in here and they are based on percentage gains. Okay. Because I don't want to waste my time trying to pin things. If I have multiple, and this is what I tell everybody in the room, if I have multiple, sure, like I have one on right now for tomorrow for an expiration. If it pins it, then great. but I've already recouped the money that I spent, if that makes sense. So I'm more in it for the percentage gain loss versus trying to pin something. I just feel like it, for me, it's like, what do I tell people? It's like going to a craps table and trying to roll the number 12. Your odds are like 1 in 36. I believe the odds are probably a little bit worse in trying to pin things. So, unless you make it super wide. So we cover the futures every single morning. That's actually probably one of the most popular traders, I would have to say, within the group. So we have a really awesome strategy for futures, and I'll show you that here in a second, kind of give you a tip on that as well. Okay. So let me move on. So the tip, here's my next tip that I want to show you guys really quick. So the first one was understanding your allocation before you go into a trade. The second one is placing increments of quarters within your zones. And then the third one is that I want you to do this right now. I want you to click on your mouse. I want you to go over to your Fibonacci's. Okay. And I want to show you something. Let's just put it anywhere we want to on the chart. All right, whatever your Fibonacci's look like, let's go ahead and click here, and let's go ahead and go to edit properties. These numbers, folks, I have studied these for a very, very long time. Not all of these are Fibonacci's. I'd like to kid around and tell everybody this is just my measuring tool. So a long, long time ago, when I first got started with trading, I was in a small private group of traders, and I found out really quick that trying to buy breakouts and wedges and flags and all these type of things, they weren't working enough. Every once in a while they would work. And what I started noticing is I kept getting stopped out because honestly, I didn't understand where supply and demand was. But the thing that really got me interested in Fibonacci was the fact that I didn't even know it existed, or I didn't really care about it, to be honest. And then I said to my friend, is there something that I can use to measure on the screen? And he said, yeah, you could use the Fibonacci's. And I said, oh, awesome. And so what I started to find out is I would go back in time and I would measure things. And these are the numbers that I found that work the best for any strategy, really. These numbers are really awesome. Let me talk about them really quick. The 23.6, 38.2, basically, depending on the trend that we are moving in, this is a bullish or bearish trend or channel, you could call it. So this would be a channel. The 50 is what I call the tug of war. This is where money kind of meets the road, right? Bulls and bears, they basically have a tug of war at this level. The 618 is your golden Fibonacci. That one's beautiful. And depending on if we get over it or under it, can break the trend. The 76.4, I call it the imposter. The 88.7 is my favorite number in the whole wide world, and that is my go-to on everything. You can change these around, and it's very easy. All you have to do is change the numbers within here and then go to save as default if you ever choose to use your Fibonacci like I did when it comes to measuring things. So my next tip to you folks is learn how to use Fibonacci's in and use them as an advantage for you. Let me go ahead and show you something really quick. I'm going to create a drawing, and this is probably one of the best tricks that I can teach you that really has helped. And I've seen it help people for over the last 7 years. And I want to teach it to you if you've never seen this. Let's go ahead and go into, I'm going to go to create a drawing set. And we're going to call this, let's just call it Fib example. Okay. This one's pretty awesome, folks. What that does when I do that, notice down here, it's called Fib Example. It clears my chart. It does not erase what I had on there previously. I just simply go down here and then find the one that I was using previously, and then that will take me there. That's another tip. All right, so this is the PMZ or the pre-market zone. You asked about futures. Our future traders absolutely love this level here. This is called the PMZ, okay? PMZ. Anybody know what it stands for? PMZ. Pre-market zone. Now, at the beginning of this morning, just like every morning, I coach how to trade around the ES futures. I give a blueprint. It's anywhere from a weekly all the way into a 5 minute. Every weekend, I give you all these charts so that you can trade off of them. Okay. Every morning, I give an in depth analysis on where we are looking for the ES to bid or for sellers to come in. And that's based off of supply and demand. And then we pay attention to trend. I want you to notice here, this is called the PMZ. And before the market opens, it tells you what your risk is. Are you looking for a plan that gives you your risk right up front? How many of you, I really want a real answer here, okay? Because I'm kind of getting an idea that most people that tune in are experienced, but I want the traders who have not been around to also speak up. Don't be afraid to speak up. When you go to take a trade, do you already know what your stop is? Do you already know what you're going to lose if it goes against you? How many of you already know that? Big bull. I love that. All right. So a lot of yeses in here, and that means there's probably a lot of no's out there that don't want to say it because all the yeses have said yes, right? I remember that was me a long time ago. So this strategy, okay, is one of our most popular strategies, and it's called the pre-market zone. So when you wake up in the morning, you get a risk, and it's very straightforward. What is the overall trend? You can see it's bearish, okay? And you can see that we have this box here. We can see what our risk is. And basically, can anybody guess? And if you're in the trendy trading room here at Simpler Trading, you're not allowed to answer. How do you trade this just by looking at it? Can somebody tell me? Anybody have a guess? How would you trade that? There you go. Short below, long above. Pretty straightforward, isn't it? Your stop, 2.05. Now we do the math because the increments are quarters and futures. It might be 2.25 in that case. But as you can see today, guys, your risk is super small. Going short here would pay off pretty big. Not only do we have automated levels to give you targets and so forth, I also show you where the targets are. And you get to learn, right? I'm not just going to like give you a chart and not teach you. Okay. So PMZ, boom, looking to go short. Now check this out. We come into an automated level, it's starting to bounce. Notice that your histogram is starting to turn yellow. Things are turning up. These are the kind of trades that I love. So you might be asking yourself, well, how does it perform on other days? Well, we also have something called the PMZ for night traders. That's right. Trading does not stop at trendy trading. Like literally, our traders like to trade all through the day. And that means even at night. Okay. So this is a PMZ for nighttime. Your risk last night was about roughly 4160 by 4159. So let's just say 2 points. So you're looking to trade to the upside when it comes in, boom, make some money, breaks down to the downside, boom, make money, market opens, you're still making money to the downside. If you want to go back and back test these, you can. You can pull up the data. I've already done it for you for a very, very long period of time. These work very, very well. Matter of fact, if you're not a future trader, you don't really care, and you're thinking, well, how does this work on other names? Let's take a look at Apple really quick. Here's Apple. This is the PMZ this morning. Notice here, your risk was 23 cents, folks. 23 cents. Equity, options, it doesn't matter. Your risk is 23 cents. Look to trade to the upside, boom, you get an explosion to the upside almost into automated levels. But price is pulling back. PMZ is support until proven otherwise. Notice right here, it gave you your an afternoon session to take a trade as well. Notice that your histogram also went from red to yellow. Very nice risk to reward, folks. Really straightforward. So, what is one thing that you're starting to see that I like to use in a lot of my trading? Boxes, right? It's boxes, isn't it? So right here, yeah, so you should see the numbers right up here. Boom, right there. That's right, CJ. Good eyes. Okay, good eyes. So I like to use what is called zones. They don't necessarily have to be supply and demand zones. Okay. Now I'll tell you, my number one go to is supply and demand. There's nothing better than supply and demand. I am brainwashed. You will not prove to me that there's any system better. I've tried, I've listened. This is probably the best tool to incorporate with your trading. But it's not just about the zones, it's about how to think like an institution, which we're not going to get into today. But that's what I love to teach about. Okay. So, what can you do in order to incorporate boxes around your trading? I want to show you something. We actually went over this with our traders yesterday, and I want to show it to you. This is one of my lovely EMA clouds. Okay. It's an EMA cloud. It's not like all EMA clouds. It's the Cadillac of EMA clouds. It actually turns different colors. It changes momentum on crossovers and so forth. And it also has built into code supply and demand zones. So it's already identifying levels for me. Okay. Now, here's the thing though. If you're trading a cloud, and this is, by the way, folks, my last tip of the day, let's go to a whiteboard. And I have many tips, okay? But these are the ones that I feel like can really help you out. So let's say that there's a beautiful cloud and it's doing something like this. I would tell you once price breaks below the cloud, it is a short every time it comes up into the cloud. Does everybody understand that? Amateur short on the lows, professional short on the highs, just like most professionals go long on the lows and get out on the highs. It's easier to talk about than it is to do it. I watch people do the opposite every single day. So tell me something. If you had this cloud, now that you could see that demonstration, if you had this cloud, how could you approach going short when price is underneath the cloud? You get big bull. I mean, yes, 100% short the rips. However, short the rips, and I'm not trying to, make fun at that, but what is that process? What does that look like? How do I touch that? If somebody said, "Hey, John, what's your process?" and I said, "Short the rips," rips would be like perspective, right? Just like small versus large is perspective, right? So, what does it mean? What can you do? What can we do to that cloud? What can we do to make this a little bit better for you to understand? Price is here. I say, hey guys, don't be the amateur and short on the lows, be the pro and short on the highs. Price starts to go into the zone, and you say, but where? Draw a box around it. Where? How do you draw a box? Use the bottom of the line here and the top of the line here. You got yourself a box. Everybody understood? Dana, great. You guys see that? So if I come over here and I come to this line and I go to that line, check it out. 170.78 minus 171.12. That is my risk when I go short here. My risk is the difference between these two. Everybody understand that? The biggest tip that I want you to take away from today, folks, is that I want you to know what your allocation is about. I talk about allocation almost every single morning we get started. I don't care that my boxes work. I really don't. What I care about is that you have the confidence to take a trade. If you can't get the confidence, then I'm wasting my time. I want to teach you how to do that. I want you to be able to sit down, get prepared, plan for your trade, and take that trade with confidence. And even if it doesn't work out, you can go back to your journal and you could say, I did what I planned and I'm a better trader. That's what it's all about. Execute those trades, journal them, stick to the same process over and over, watch yourself grow, not only mentally and physically, but you'll start to see it in your trading. And then you'll just cut out all the noise. That's what it's all about. You don't need anything else, folks. I'm telling you right now, you can look at a chart and figure out where supply and demand is. You could trade around this, but you got to get confident and you need something to help you get there. That's what I am. I'm like a lifeguard. I'm trying to make sure that you're stepping out into the right conditions, that you understand how to get out of the current. And if something bad happens, what is your safety? It's your allocation. It's understanding what you're doing before you take a trade. Anyways, that's 30 minutes, guys. That's my time. I really, really appreciate you. If you have anything to ask, please ask away. I'm gonna jump off of the restream out here, but I'll be, monitoring the room here if you need anything.